Welcome to Chill Deal Trades. We are covering one of my biggest bets for the next couple of years, PayPal, and why the company that you probably have thrown in the trash can is actually a much larger company with new leadership, with consolidation, whose operating margins are going to increase substantially with consolidation and AI. Let's hop into things. If you don't know much about me, I've been trading in the market for 12 years, really in like a lot of technical and fundamental analysis, business owner myself as well. But let's hop into things. What happened with PayPal? That's the first thing we're going to dive into, like understanding the business, what changes have been happening, the business transformation. So what do we need to be aware of that's happening currently that will impact the future? PayPal might be bigger than you think. There's like this cultural sentiment that PayPal and Venmo are irrelevant, but we're actually going to look at and see what the data says, risks for the business. So we're going to talk about the things that they must win, that they must produce for this to be a good investment. And then we're going to look at 2024 and Q4 earnings. And we'll finish off with some technical analysis of the charts. Starting off hot, we must not forget that PayPal is a humongous company, guys. Number one, and Venmo's number two. Most popular mobile payment app in the US. I think a lot of people think about PayPal and Venmo as like a consumer-only facing business. PayPal is the backbone for the mobile and e-commerce and online digital companies. At its core, yes, they have a big B2C, which is business to consumer, through Venmo and others, and, peer-to-peer payments. But PayPal is a B2B2C business. It's a business going to a business, and that business is then going to the consumer. They are the largest in the world, guys. Do not forget about this. And they are number 5 most valuable financial service brand in the world. That's like a whatever statement. That's like just like a little bit of gloating. But number 1 and number 2, PayPal third most trusted brand in banking. Guys, this is a global business, not just US. They have exposure around the whole world, and they still are the leader in this space. I think their business has had a lack of innovation over the last, let's call it 5 years, but I do believe that new leadership is turning that around. Again, do not forget, consumers and merchant accounts, 430 million. We're talking about things like Facebook, social, like how big they are in the world. We think about how many people use Google. 430 million businesses and consumers, guys. This is a ridiculous, I just know what just popped up. This is a ridiculous, let's go. My games are trying to destroy my video. This is a ridiculous number. 200 markets, 1 and 2 in the US, number 1 in Germany, number 1 in the UK, number 1 in Australia. Guys, this is a world-renowned, a world-known brand that functions around the world. It's important to remember this. Next thing, a man with a plan. PayPal, I would say more recently-ish, has a new president and CEO. And I think it's important that we know that the PayPal business has stagnated. They have slowed down their innovation. Their business was just overly segmented, which we'll get to. But they have a man with a vision who's implementing it right now. They've been working on this for the last, call it, year and a half. And now they're starting to get to the point where they're making drastic changes that will happen over the next 12 to 18 months. This is important because we know as the markets look forward. We don't look at where the company is today. We look at where it's going in the future. And so just a couple of things, couple years of experience. He worked at Intuit, QuickBooks, MailChimp. So he knows this world, right? He knows the world of finance. He knows the world of data. You guys got to remember, this is a data company, 430 million merchants and people that they have their data about their purchasing, about their habits, about how they spend their money, about who they're connected with. On the business side, how these businesses run, who's interacting with these businesses. There's so much data, and this is honestly the right guy to oversee this business. Looking at some of the management, I just want to highlight here, I think management teams is one of the most important things to look at when you're investing in a business. And we see a really good balance of OGs who've been at PayPal for a long time, who know the business, and some fresh blood, people who are coming in with new and fresh perspective. I want to highlight the Chief Technology Officer working at Walmart, most recently Yahoo, 25 years of experience, CTO at Marketo, StubHub, eBay. Like, having people come in the business knowing that these guys have really stagnated over the last couple of years with fresh perspective is essential, and having them in large leadership roles like a C-suite is really going to help them innovate and see how they need to make fresh adjustments. Having someone work at Walmart most recently, and we know the digital transformation that business has gone through, I think is a really important hire, but I like to see the mix of both old and new. Going into the vision some more. So I want to highlight again, we do not trade for businesses today unless there's really bad news, which I don't think there is for PayPal. We're investing now for where they're going into the future. And the main things I want to highlight here is 2024, return to profitable growth, which check, right? Like, they're building their scorecard that they can achieve what they say. 2025, accelerated profitable growth, win checkout, scale Omni, grow Venmo, accelerate SPD. Main thing I want to highlight here is win checkout. This is going to be important, we'll get to. And then evolve into PayPal as a commerce platform powering the global economy. We'll get into that day of simplifying their platforms and consolidating and finding more uniformity between all their different things they have going on. Priorities. So we know they have a focus. We know they're getting their shit in check, right? They're now profitable. And they also have key initiatives that they're focusing on. As we just said in the last one, win checkout is huge, guys. The business is now in e-commerce. Digital purchasing is continuing to rise, and it will just continue to go up and to the right. So winning checkout is essential, that they can be the main winner in this space. Scale Omni, right? We know that PayPal launched a debit card. I think this is super bullish for pulling people back into the Venmo and the PayPal ecosystem. So both of those play off each other. I'm not going to really go into grow Venmo and accelerate SB small business, but these first two I think are so essential for that really big, large growth in the future. A plan again, guys, and again, this is what I keep saying. We are playing this business now because of where they're going into the future. They said for 2025, 6-10% growth. I think they said 8 in their most recent. So 8% growth. That is maybe slightly up from last year or flat. I'm okay with that because what did I say? We have operating income improving. So growth is staying the same, which is healthy, especially in this economy. But they're seeing operational income increase. So they're becoming more profitable. We heard they're buying back large amounts of shares. Another reason I'm bullish on the company. Shrinking the float, right? Which makes the stock easier to move higher. That's a whole other topic. But by 2027, low teens growth, long-term ambitions, 20% growth. They're going to have to do a lot to prove to get, if they're really going to get to 20+%. But even if this business gets back to low teens, mid-teens, getting into the double-digit growth, the multiplier that this company should be trading at will increase substantially. We know at a forward PE, I think they're at like 12 or 14. This company, if they can start showing this accelerated growth to the teens, I mean, this should be a high teens, 19 forward PE, maybe in the low 20s, which makes this business has substantial upside over the next 18 months. Has a vision, again, getting into this. This is what I think is most important about the evolution of PayPal and Venmo, is going to one platform, one profile, one process powered by AI. Guys, yes, it's a powerful statement, but we'll actually look into, they're already starting this process, and the timeline of making this happen is not very long. So as we see here, one platform they currently completed, right? Last year completed H1, consolidating into PayPal, and then have Venmo, obviously. But then by the end of this year, early next year, they now have PayPal Braintree, which we'll get into some of I think in a couple slides of why that's so important. But consolidation and simplification is critical for this company to create sustainability, increase operational income, and usability of their platform. Innovation, guys. This company is back to an innovation cycle, which is so key. PayPal was broken. This is just like how bad their system was, right? Like on the consumer side, you have 3 different aspects. On the merchant side, you have 3 different aspects. And that's why I'm saying this is so important, because they're going from 6 different aspects to 2 to 3. Guys are cutting down. I listened to the most recent earnings calls, and something that the management said is that we saw that there were so many teams working in different buildings, fighting for the same clients, fighting for the same business. They've now consolidated everybody under one building and one, consolidating teams, and they're seeing so much more operational improvement through that process. Guys, again, we don't trade for where PayPal is today, even though I think their stock is in a healthy range. We are trading and we're buying for where they could be in the future. That is why we are investing. We're investing in the future. Again, one platform, I just mentioned this together, simplifying data, but more importantly, simplifying the data stack. What you have to realize about PayPal is they are an amazing data company. And like I said before, 530 consumers and merchants, 2-sided data. Data on the business side, data on the consumer side. You now start to find pathways to line this data up. You unlock advertising. You could sell the data. You understand more about the customer, and you can put things in the right places or stack things in the right ways to make that person use your platform more. Consolidating platforms, unifying data is going to unlock new growth for this business. This is just an example that I took from their deck of showing how in the past one person had multiple profiles, and so now you're squishing all those profiles into one. And so instead of having Robin does this here and this here and this here, this is like the customer that we have. And why this is so valuable, because when we talk about advertising, when we talk about, what do we show this person in the apps, how do we make them spend the most potentially, or how do we save them the most money, they now have a deeper understanding of who their customers are on the consumer side, which makes that data more valuable for their businesses that they partner with. Again, slow data in the past. I want to bring in, I think, a very important topic here of the world going to digital and how that impacts things. See, in the past, they have one hub and they have everybody going to that one hub. Where they're switching things is now they have multiple hubs so that there's less latency and degradation of performance or speed. And so they said is that cloud native, what we're seeing in the early stages is a 20% reduction in latency and a 2 to 3 times faster checkout. We'll get to in a second. Actually, it's a slide. Let's just jump to it. Why it's so important is because we are in a digital age. Digital everything. It's e-commerce. Businesses like Walmart that have this giant network where people sell their products on. PayPal is in the backbone of most of these companies. And so if PayPal can say, you know what, guys, we actually have this new infrastructure where we are faster than everybody else. We make it easier for your customers to check out. There's going to be less lag and less latency. We also can give you better insights and give better recommendations to the people purchasing, because we now have consolidated data about who these people are. And that's when I go to Fastlane. Fastlane is basically quick pay. This is probably where they have the most opportunity. They said on the earnings, the CEO was talking about how they believe this specifically is a winner take most market, which I agree with. We saw things on Amazon and how one-click buy and that whole process changed the way people shop. And so we see this across other platforms now, and PayPal already has a good backbone of clients to be the winner. Now they just have to execute on this, but this alone will get them to the teens growth year over year. They're seeing amazing performance so far. Talked about in the earnings of as soon as we're doing this with small businesses, we're just seeing what can we do next, and they're seeing a lot of referrals happen through that process. We talk about small business, that's really important. We think about the rise of Shopify, right? And Shopify is a big partner with PayPal, but PayPal continuing to dominate the space is very important. But overall, PayPal everywhere, enhanced checkout, Fastlane, these 3 focuses, and having the data move quickly and having the data consolidated in a way that they can get the most out of it these guys are making steps toward this already, and by the end of this year, they're going to be in a much better place, which is not very long, guys, 9 months away. On the lookout. So I just wanted to highlight a couple things that I thought were really important for the long-term picture of PayPal. So ads. PayPal on their yearly call said, you know what, guys, we are going to move ads onto our platform for businesses to advertise. This is huge. They haven't done this in the past, or haven't done it to the scale that they're going to start doing it. New revenue streams to scale. Like I said, they already have these large partnerships. They are the recognized brand. So to the point, Disney Plus. We realize how digital the world has become, and now PayPal can start accessing this additionally through advertising. Some of the stats: 65% checkout lift from accounts that served or enrolled offers. So these offers, 65% checkout. That's insane. 106% merchant offer redemption year-over-year growth. So like I said, this goes back to the data point. Because they are stacking their data differently, because they're consolidating their platforms, this data is becoming much more valuable because they can serve people the right things in the right time, in the right place. And this is exactly why companies like Meta and other platforms became so great and profitable, is because they learned, they organized their data in a way to build algorithms that could scale the business, and PayPal is getting to that place. Another thing I think is really interesting for the long term is how AI will start to play a bigger part in PayPal. Like I said, when you have all this data from merchants and people, right, and consumers, and you start building these models that can analyze the data and give people the right things in the right places. Let's just use, Facebook ads as an example, and how well that's done over the years. They can start leveraging their data much more effectively. And so they talk about kind of through the presentation how you'll have an AI agent that gives you the right offers or shows you the right things to add in your cart or make the right decisions. This is a little bit more long-term, maybe 3 years out. But again, this is such a great sign that PayPal's talking about this, because they now have leadership that is on their toes on the front end of innovation and not on the back end. And that's critical for this company to get back to teen growth. Let's go over the earnings a little bit. So first thing I want to point out is kind of the state that PayPal is in currently. We talked about it at the beginning of the presentation, but beginning 2025 with a strong foundation. Return to profitability, profitable growth, guys. This is so huge for the business. This is what will turn around the business. That plus share buybacks, $15 billion. Guys, this company is not that big, and doing a $15 billion repurchase program is insane. And that alone is going to help push the price up over the next couple of years. Assuming something really terrible doesn't happen, like seeing zero growth or anything. If we see that low single digits growth plus share buybacks, plus continue to update on improvements to their mobile, to their speed, updates that they're hitting their timelines, this stock is worth more. Making progress on scaling checkout enhancements, driving scale and adoption, innovation, and with our brands, interest on company on balances, $6 billion share repurchase in 2025. Guys, this is just, PayPal's not there yet, but they're really close. And we think about investing and making bets. This is a company that has a foundation, has new leadership. And so it becomes really intriguing that this could be a great investment. It's not financial advice, but it could be a great investment. Some accomplishments. So again, return to profitability, just smiley faces, right? Full year 2023, down 5%. Now we're at 5%. Active accounts down 2%. Now we're up 2%. Consumer, 0%, up 2%. Free cash flow, $2 billion extra dollars of free cash flow. Guys, like I said, with the consolidations and the changes this business is making, they are becoming an extremely profitable company. There's no reason this company should not have been this profitable. They are a data business. They are a digital platform. They are the middle player, between consumers and businesses. There's no reason this business should not be extremely profitable. And I believe that this free cash flow and profitability is only going to increase over the next couple of years. Data machine. Like I said before, these guys are a data machine at the end of the day. Yes, they are the middle player between consumers and purchasers, and now they have their own consumer-facing products, right, like the credit card. But data is just so important. And this is, again, just to show how many monthly users, how big they actually are. And don't forget, I think someone in one of the comments said, like, oh, nobody uses Venmo. Guys, look how big they are. This is a global business that has reinvigorated vision, led by great leadership and making the right adjustments. B2B2C domination. Again, just how big they are. Walmart, DoorDash, Airbnb. You ship Uber, Meta, Microsoft. We can put PayPal, or we can put Shopify on there. 84% branded checkout presence across the top U.S. consumers. So a branded checkout is basically the other brand is showing that they're doing this, but actually PayPal's on the back end. Again, they just work with the largest brands. And as they make these improvements to their speed and their checkout, showing that we have the best checkout, we're making the innovations that you should not use with smaller businesses that are coming out, which I do believe PayPal will continue to build that moat with their new leadership and adjustments. Like, they're going to continue to dominate this space. Highlight a couple things, some things that I love, some things that I don't love. So growth, 7%, a slowdown from the full year. Don't love that, but we do know that the CEO came in, I think, at the end or mid 2023. And so obviously some of the growth is slower because they were already making improvements to the business. But I do like the 10%. 10% is good. If they can hopefully stay around that 8 to 10%, ideally, that's going to show a lot of positivity for 2025. 4% on revenue, 7% on revenue. Meh. Again, like, I want to see this closer to 8 to 10%, but we'll see. The last thing, free cash flow, like I mentioned before, double check mark. This is huge, and I do believe they will continue to become more profitable business. Guidance. So transition margins, 4 to 5% growth, meh. Like, they really need to figure out how to accelerate that some more. There's a lot of fear about consumers slowing down. I do think the consumer's slowing down a bit. But again, if they can make the right operational improvements to increase their profitability, then some slowness on revenue growth or transition margins or in transactions can be compensated with some increase in profitability. Non-GAAP EPS, I like the 8%. Hopefully they can get above 8%. That'd be huge. For the full year, getting to, is it at 6 to 10%? If they can start pushing towards that 10%, again, this would be so huge for the business. You got to start thinking about this business differently from a valuation standpoint. If they can start getting to those high singles, low double digits on growth in revenue or EPS. Free cash flow, share repurchase, so bullish on that. This is the main thing that people are overlooking, and it's so big for this business. And lastly, just to review, going over some of the main highlights, because it's a long-ass video. They have a renewed vision. They have a new CEO, who's been here. He's now understands the business. They have the right vision. They're executing the vision, and they have a good mix of new people and OGs. So it's a balance of, I know the business. Here's some new perspectives we should have. Simplify, that is not spelled right. Simplify platform and company stack will improve operational or operating income. That's the right word, operating income, and improve data monetization. So again, simplifying the platform, better read on the data. They can then monetize that data. That's a simple way to put it, and it's very, very big for the business. Mobile first is key, and this is PayPal's focus. I think it shows that they have the right leadership when they're focusing so hard on mobile. Understand that slowdown and latency and the ability to process payments quicker, or the process of someone not even having to put in their credit card information every time through Fastlane and just buy with maybe a code, or something. This is so important that they're focusing on this, and this is going to be super valuable to businesses and consumers, a win-win on both sides. And like I said, that is Fastlane, and that is a winner take most. So the risk is that they don't innovate quick enough here, or they don't make the right innovations and somebody else starts taking market share. So we're going to want to pay attention to that because that's the biggest risk. But revenue is steady, but needs to improve. If this company this year says we're growing at 5%, I think their upside is going to start being more limited. But if they come in Q1, maybe into Q2, say, we're at our 8% growth, or we're projecting 10%, that valuation needs to go up 100%. Last but not least, let's go into the charts. So I've already covered this a few times, but covering it again. So we keep highlighting that the 100-day on the weekly is at $67. We really want this stock to stay above, right? We came down below, came back above, came back below, and now we're back above. We really need to keep this 100-day. I say if we don't keep this 100-day, then we're going back to this lower zone, which I don't love, because what happened when the stock was in the lower zone, it just hung around there forever from May 23 all the way to July 24. Guys, that's over a year just going sideways. And I do believe if we don't hold the 100-day, then we're probably going to go sideways for a lot longer again. But we'll continue to keep an eye. Like, I've been buying on some of these dips down here, increasing my position. I think I have like a $70 average cost right now, so I'm in a healthy range. I still do not have a full position, so I can buy more on a dip. And that's a tip to buying, guys. If you believe in a stock, don't buy all your position at once scaling, because you never know what's going to happen. If someone bought in right here and they're like, oh, PayPal is going to revamp themselves, which I agree with, but they didn't position themselves in the right way, then they can't buy this dip. And so, again, we need to hold that level so much. PayPal's, one of the big positives since the market crash is PayPal hasn't gone down at all. So PayPal, I think, was around $73 when the market started first pulling back, and they're at basically $68. So like a 5% move or less on PayPal, where the market's down, 10 to 15%. That's a great sign that says there's a lot of buyers here. People believe that this is fair value, at least, if not higher, right? If the market's going down and your stock goes less, that probably means that people are buying more than selling, right? They're selling out of other things and maybe buying into something like PayPal and holding it up. And so we're going to see what happens here. If the market starts to go green, we're going to want this to start creeping up with it. If it doesn't start creeping up with it and we see sideways, that's not a great sign. But I'm okay, because this is a long-term holding. You need to define what your investments are. For me, this is a long-term holding. So I feel very bullish that this stock is not going under $60 anytime soon. If it does go below 60, then I'll have to rethink my investment of like where my belief is in this company. But unless something really, really bad happens, which you can never know, but I can't see it from all the research I've done, I have to rethink the investment, or I might have to double down or something at those lower prices. But this is very bullish that in a market sell-off, it held here. Super bullish. So that means this is finding a retracement zone. It's finding a potential bottom, right? And so if we just zoom out, right, and say, okay, let's just call this a wave 1, and this is a wave 2 maybe, then we'll maybe have a wave 3. But let's keep an eye on how this is moving. Guys, I hope you enjoyed that video. If you're still here, you're a real one. Let me know if you like these deep dive videos. They're fun for me because I get to find long-term investments, opportunities, and hope you feel the same. Till next time, guys, let's win in the market together.